So what is an order block? Cashflow Marco TV. Like, share, and subscribe. Be sure to hit that notification bell. So before we dive in on the laptop, I like to go over the fundamentals on the board. Let's do it old school first. Order block is a market structure that indicates a significant zone where large institutional orders are placed, leading to a strong move in the market, meaning we trade with the bank. Here I have a diagram just to keep it very short, sweet, and simple. We have a bearish order block and we have a bullish order block. An order block is formed when there are two touches in the same price area and there's a significant drop or is a significant rise in price. I'm going to draw one more order block that is very important when you are trading on the markets. I'm going to make it very quick. So here is what we call a breaker order block. You have two touches. You might have price reverse and shoot straight through. This is what we call a breaker order block. And for short, I'm gonna just put OB. So price formed what looks like a bearish order block, but price decided to reverse and return and go the other way, which is very important when speculating this market because we're dealing with a probability game. Price is not going to always do what we think it's going to do. It's going to do what it wants to do. So it's very important to be able to identify these types of order blocks when trading. Now, when I trade, I use 4 confluences: order blocks, sell side, buy side liquidity, imbalances, and failed swings. But we'll go over those in a different video. Today, we're just going to focus on order blocks. So how do we identify order block? Well, first, we want to look for a strong price move. Second, we want to spot a candlestick pattern. Third, we want to identify support and resistance levels. And fourth, we want to identify previous swing high and swing low. Wow, it's pouring down, huh? When we look for a strong price move, we want to identify an area where the price moves sharply in one direction after consolidation or retracement. This indicates that large orders will likely be placed here. When we spot the candlestick pattern, order blocks often formed around this key candlestick pattern, like the last bullish or bearish candle before the sharp move. For support and resistance levels, the order block typically aligns with major support or resistance level, acting as potential reversal or continuation zones. For previous swing highs and swing lows, these blocks often form at previous swing highs or swing lows, indicating a shift in market sentiment. Now, order blocks are crucial for understanding where large players have entered the market, as their positions tend to drive future price movements. A bearish order block is a zone where institutional selling takes place, marked by a sharp downward move following a period of consolidation, indicating potential resistance and price continuation lower. A bullish order block is a zone where institutional buying occurs, typically marked by a strong move upwards after a consolidation or retracement, signaling potential support and price continuation higher. A breaker order block occurs when a previous bullish or bearish order block is violated, often signaling a shift in a market sentiment and acting as a new area of support and resistance. Now that we got that out the way, we can dive on the laptop and we can start discovering where we can identify order blocks ourselves on the market. Shall we begin? Over this live trade we have here, but I'm gonna stay on task. We're gonna go over what we went over on the board. We're gonna stick to the fundamentals. I'm gonna go over my pre-market, entry, post-market analysis. Then we're gonna actually go in and identify a live order block on a naked chart. And then I'm gonna wrap it up. Okay. So, like we said on the board, we want to look for a strong price move. We want to spot candlestick patterns. We want to identify support and resistance levels. And we want to identify previous swing highs and swing lows. Now, what I have here is my trading journal from, wow, it's actually been a year, from my prop firm challenge from last year, which I passed. This is phase 2. And I'm going to go over the last trade, which was our gold trade. So, 1, pre-market analysis. Where do you see price action in the higher time frames? And I'm going to pull up the chart, the live chart example. Well, this was our actual trade, but I'm going to pull up what I was actually seeing so you can have a visual. Where do you see price action in the higher time frames? Price is creating higher highs in the daily. 2, if you were to go with the trend, where? Bull, meaning price going up. 3, are there any reversal candlesticks in your zone? Bullish engulfing in the daily. This is why it's best to start with the higher time frames and scale down. With me being a swing trader, I trade based off the higher time frames and scale down once I make my entry. 4, where are 2 or more time frames in synchronicity with the trend? The daily and the 4-hour. 5, do I have a confirmation? Yes. A Fibonacci and a failed swing. So here we have a failed swing here in the 4-hour and a Fibonacci where it looked like it exit the 50% zone and it started to go towards the 0% zone. Entry. What is your risk to reward ratio? 1 to 3. How much do you plan to earn on this trade? So we plan to earn about 3K, but we took home about 1,800. Or was it? Yeah, it was about 1,800. So which session did you enter? We entered in Tokyo, but I usually enter in London, so it's a bit touchy. Where is your stop loss? 2407.15. So 2407.15. Where's your take profit? 2435.62. And as you can see on our trading journal, our closing price was 2435.62, meaning that I set my TP and my stop loss before I entered the trade. So it automatically took me out of the trade on its own because my TP was set, which is very important when trading. Why are you taking this trade? A bounce above the bearish order block, which we're going to go over on the chart. Did you use any indicators? Sessions. Sessions is what I use. So I stay inside my session. I usually trade London, but in this case, I traded Tokyo. Give me 3 confluences: imbalance, failed swing, and an order block. Where's your entry? Like I said, 24/17/15. Post-market analysis. Did I follow my plan? Yes, I allowed price to hit my take profit. 2, what did I do well? I allowed the trend to be my friend. Where can I improve in the future? Continue to wait for a confirmation. What did I learn? In victory, know when to stop. My rules are in place for a reason. 5, did I prepare properly? Yes. 6, why did I take this trade? Break or order block forming. 7, what is it you were seeing? An imbalance being filled. Where did you exit? 2435.62, and our profit was 1848. So a lot of these principles that are instilled in me come from my ABC Trading Rules ebook. And the main rules that I followed was once my stop loss and take profit was set, I left it there. That was the main takeaway from this trade. This is why I was very profitable, because I did not change my take profit or stop loss once it was set. So here is the live trade, and we're going to identify an order block, and then we're going to wrap it up. Okay, look like I already have one. Okay, so why did I put a bullish order block here? The reason I put a bullish order block here, and this is today. This is of today. This is not last year. This is of 2025. The reason I put an order block here is because there are 2 touches in this area, and there's a rise in price. Now, what is this red line? This red line, this represents sell side liquidity. So this is our resistance level. According to retail traders, this will be considered a resistance level, and our order block here will be considered a support level. I'm going to go back to 2024, and we're going to go over the trade here and why I entered it, and then I'm going to wrap it up so you have a clear understanding. And I'm actually going to pull it up in the 4-hour and the hourly. So we got the 4-hour here We're going to scale this down to the hourly. Right. It's 2024. July 2024. Which is down here. About the 31st. So here it is right here. In the hourly, and I'm gonna pull it up on the 4-hour. Almost done. We almost done. But for the sake of time, I'm gonna go ahead and identify the order block I was seeing in this video. So this was around the area of the breaker order block. So we knew that this was a breaker bearish order block that was formed. But before it became a breaker bearish order block, it was a bearish order block. So when there's a bearish order block, that means price is making a heavy move to the downside. But we see here, as we wrote on the board, price reversed and it decided to shoot through. That's when we made our entry. So let me pull up the sessions here. And just to make it short, sweet, and simple, red stands for US, purple stands for Tokyo, blue is Sydney, and green is London. So when we entered this trade, we entered in Tokyo and we got out at US session, or it exited us out US session about 3 o'clock, about when market was about to close. As you can see in the 1 hour. Now let me go back to the 4-hour chart and show you the bearish order block and why we identified this as a bearish order block. Now we called this a bearish order block because price made 2 touches here and went into the downside. Now it wasn't perfect and we didn't make a perfect entry, but we knew once price broke this area here, it was going to go on the upside. So as you can see, price closed, opened and closed in this area twice, and it made a sharp move to the downside, making it a valid bearish order block. But as you can see, price reversed and came back to this area and shot straight through. We enter here and price closed above this bearish order block, making it a breaker bearish order block. And price continued on the upside. So this was just a live example of why I entered the trade. And that's about it. My ABC Trading Rules book is available on the Amazon store. You may get your physical copy now. I also have the ebook available online at www.createart.com. Again, that's KREYEART.com. Thank you for watching Cashflow Marco TV. If you got any value from this video, like, share, and subscribe. Be sure to hit that notification bell. Like I always say, I have a lot of value and a little time to share it.